Okay, MegaWhale team, welcome back to our channel. Thanks for tuning into another video today. I hope everyone's having a fantastic day. We've got a lot to talk about today, a lot of questions to answer, a lot of things to show you, and a lot of information to share. Today's video's focus is going to be about the route that we are going to take downwards from here. We have had a significant breakdown on the Bitcoin chart, which I'll show you right now. Here's our breakdown, as well as a significant breakdown on the total cryptocurrency market cap and a variety of other charts. We're going to be talking about exactly how we think the price is going to travel from here after a breakout down towards our price targets, and following up from there, we're going to do a few questions. So before we get started, I do want to draw your attention to the pinned comment down below. Head over, click the links, you can join our Twitter, and of course, head over and join our Telegram. We also have a VIP Telegram channel where we do daily market updates, trade signals, and much more. I'm going to go ahead and bring that up on screen for a second over here. You can see our VIP Telegram channel over here. We have close to 400 members. We do a variety of different trade signals, market updates, whole variety of other posts, and much more. So go ahead, if you're interested in that, you can go ahead and join via the link in the description. With that being said, I do want to show you the questions for today's video. We're going to go ahead and answer every single one of these questions from Mario and a couple of other one of our followers. So thanks for submitting your questions over here. Usually we do take questions from YouTube. So if you've got any questions, go ahead, and all you need to do is submit your question for the next video down in the comments below. We usually pick one or two to go ahead and answer. So we'll get into the analysis first, and we'll finish up with the questions at the end. So starting on the Bitcoin chart, we can see Bitcoin has recently broken down from this large time frame ascending channel. We've talked about this many times, and we're not really going to talk about it anymore. We've talked about it so much it's unreal. We're going to talk about what happens next. So we do have a current support at around 35,500, which Bitcoin is currently testing as a short-term support zone. We can see Bitcoin is currently testing that level of a couple of weeks down. I think from here, the logical or more reasonable expectation for Bitcoin would be a move back upwards to either retest the descending wedge resistance, or breaking through the descending wedge and retesting the ascending channel support line. From these points, we can expect a further rejection downwards. I do want to point out that if the price does fall below the open of these lower body candles, meaning falling below the open price of these candles, we can expect Bitcoin's price to lose the $35,500 support zone and continue immediately down, regardless of whether or not it has come up and retested these levels. So what does that mean? It means if you're looking for a quick scalp trade, you could probably find a quick scalp trade on Bitcoin, entering now with a very tight stop loss. But at the end of the day, both of our predictions here, both of our expected market directions are ultimately continuing downwards. Although we have found support, this is quite a weak support, it's a temporary support, and we have broken down some pretty major market structures before coming down to this level. Of course, zooming out, our next major market support will be down at the $30,000 zone. And I do want to actually zoom out and bring up the VPVR for a second, just to actually take a look at what the volume profile is saying. I haven't even looked at this actually personally for a few days, actually a few weeks personally. So let's take a look. Let's go ahead and bring up the VPVR. We're going to go ahead and put the 200 in. And we can already see that we've come down off this peak, this mountain that we've had at around 38,900. And we've got this valley that we kind of dipped into, and we got this little bit of support. If you can see over here, we have this little bit of support just pushing up where we are at the moment. And if we do fall below this red line, we can confirm a continuation downwards to around 30,000. It will be quite an aggressive, quite a quick drop if we do lose this level. Of course, the 30,000 kind of lines up with the last previous candle open and close price, as well as this level here. And if we zoom back in time, we have the resistance of this broadening wedge, as well as many other points of resistance further back at the start of 2021. So a pretty significant support, but not a strong support. So keep that in mind. A significant support, but by no means is this a very strong support. So we can expect somewhat of a bounce over here. I don't think the bounce will be sustained. If the bounce, however, does sustain and pushes back into the ascending channel, I do want you to keep in mind that all the previous bullish validations that we did have previous to this video still remain. So previous to this drop, our bullish validations were the price needs to break above the descending wedge, above the 100-day moving average, above the dotted line, and close a daily candle above 42,000 47,500 to trigger an upswing up to our 47,200 moving average. If somehow the price manages to get into this range and above those levels, we do still think that is a possibility. Is it likely? It is not likely whatsoever. It is very unlikely this occurs, but as always, trading sometimes the unexpected occurs and we have to be aware of all possibilities. For now, the downside is much more probable, just as the downside has been much more probable ever since we identified an ascending channel formation. Let's go ahead and take a look at the total cryptocurrency market cap. As we can see, the total cryptocurrency market cap has broken out of a very long-term ascending diagonal trend line. Usually this trend line finds a bit of support and we usually don't close a candle below it. Actually, in fact, we haven't closed a daily candle below it since, well, we haven't really closed the daily candle below it at all. Only on 2 instances have we even wicked below it, which is the 22nd of January and the 24th of February 2022. We have officially closed a daily candle below this level, indicating a potential swing down to 41 trillion. We talked about that in our previous video. If we reach $41 trillion, or should I say 1.4, what am I talking about? 1.4 trillion, Bitcoin will head down to $30,000. The moves will be at the same time. This will happen at the same time as this occurs. Now, same thing goes with the total cryptocurrency market cap. It broke downwards out of an ascending channel formation. This downward sloping resistance is a long-term diagonal support, but also part of the formation of the ascending channel it is. So we can expect a similar thing. A move back upwards to retest this level is very possible before we continue back downwards. So keep that in mind. So guys, that's basically all I really wanted to go over for Bitcoin today. There's not much else I want to talk about. All the other information we're going to provide with you today is going to be in the case of the questions. There's a whole lot of questions there that we're going to go over in a second that talk about a lot of the things that I would normally talk about, but we're going to expand on those in a little bit more detail. Before we get started, I wanted to quickly introduce Bitget. I wanted to quickly introduce my new favorite exchange, Bitget. Bitget is a non-KYC exchange, which is particularly beneficial for members in the UK and Australia who are limited by certain trade restrictions. Bitget has 250 plus spot trading pairs, as well as 60 plus leverage trading pairs, up to 125x leverage. Sign up now in the link in the description using our referral code to get up to $153 in rewards for completing 4 separate tasks. Let's go ahead and dive back into the video. Alright, so before we get into our community questions, I actually wanted to do a quick analysis on the technicals, as well as show you the exact route we think the price will go towards our target of 24,000. So what we'll do real quickly is we'll go ahead and just put in our line at 24,000. We do expect $24,000 to be reached by mid-July. July over here, May, June, July. Perfect. We'll go ahead and chuck a line over here around about this price here. We think what would happen is either number one, we directly lose this level here straight away, and we'll see a very significant sell-off down to this level where we would find temporary support only to resist, get rejected and drop back down. There is definitely a chance at this point in price we could see some sort of a significant bounce. It is a very strong support zone. The 30,000 level is going to be defended very aggressively by everyone. Bulls, bears, like-minded people are going to be defending 30,000 very aggressively. Like I said, on the short term, we can expect a push upwards to either retest the descending wedge, downward sloping resistance, or the uptrending resistance of the ascending channel. From here, we will get rejected. We will definitely crash below this level if we close that 4-hour candle below the green. And if we close a daily candle below the red horizontal level, we are almost guaranteed to see a drop down to 30,000. At 30,000, we're going to have to do another short-term update like we are doing today about the price direction at that point. But we can expect from there either a continuation downwards or a small crash going forward. If not, we find some kind of bounce or relief over here. I do want to point out, if we do lose a $30,000 level, we can expect a very significant drop as well. Remember, we do not have much support around these levels. If you zoom out and you actually look at the chart, beyond the price points we are sitting at right now, beyond or lower down from the price points we're sitting at right now, we don't have much data. We have collectively no more than maybe 2 or 3 months within this range in total. And below this point here, we have only a few candles, really, only a few days. there's not much historical buying pressure or selling pressure in this range. There's not much to go off. So these are pretty large gaps in the market, and we have a huge gap below 30,000 to 24,000, which is technically our next major support. Remember, 24,000 is that 200-day moving average. That is the next major support. If we lose this level here, we can expect a drop down there, and we can expect possibly a bounce. We're going to talk about this in our community question. But if we do lose this level, we can expect a drop down here. Remember, the price moves between horizontal ranges. Price movements are not random. They move between either horizontal ranges or diagonal ranges. Currently, we are at the support of a horizontal range. Although this is a weak horizontal range, we also need to keep in mind that is a horizontal range nonetheless, and therefore we should be looking towards a potential for a bounce. I do not think a bounce from this range will provide enough buying momentum to actually push it back into the ascending channel and therefore flip the trend. The trend is very much downwards, and we have confirmation of that downward trend. I do, however, believe, like I mentioned already, we can see a push to retest the descending trend line of either the descending wedge or the ascending channel before getting heavily rejected and capitulation occurs again, where we drop below this level and continue to 30K. So that is my analysis on how I think the price pattern, or I should say the price will play out from now. Like I said, we are only 1 day candle or maybe 2 day candles below this ascending channel right now. So we haven't really formed any macro structures. We haven't formed any short-term structures. It really is just in free fall, and the price is kind of finding its feet. It's trying to find its feet and trying to find either support here, or if the bears push the price further down, it will continue to drop. So it's too hard to say exactly what's going to happen in the short term. We don't have enough data. The technicals, although can provide a little bit of information on the short-term time frame, they are lagging, and the macro technicals are very much dominated by the bearish sentiment. Therefore, if we see a short-term bullish swing, or we see short-term indicators on the hourly or 4 hour suggesting moves upwards, but the macro indicators are still heavily suggesting continuations downwards, we cannot assume that short-term indicators are going to outweigh the negative or bearish sentiment or selling pressure we can derive from utilizing these longer-term indicators. So although short-term indicators can provide some justification for moves, we do have to consider our larger time and our macro environment when trading. This is one of the reasons why a lot of people on Twitter, a lot of the perma bulls, always get these reversals wrong. Because they look at the very short time frames, they see a divergence, they see a MACD cross on a 4 hour, they're like, we're going up. But when you zoom out, you realize that even if we do go up, there's not going to be enough sustained volume, or the bearish sentiment or the indicators on a larger time frame aren't suggesting a reversal yet. It takes multitude, or should I say, it takes many consistent days of bullish price action, or many consistent periods of bullish price action on a smaller time frame for that bullish sentiment to translate to a larger time frame and influence the technical indicators on a larger time frame, thus potentially altering or changing the trend. So for now, keep that in mind. We're going to go ahead and do a technical analysis on this coin next. So for our technical analysis, we're going to head down to the Bitcoin Brave New Liquid Index to do our analysis. So we're going to come back to this chart a few more times in our community questions. There's a lot I want to talk about on this chart. We're going to start on the daily chart to start with. And we can see the bull market support band. We got heavily rejected from that bull market support band. It could potentially have indicated a trend reversal on a small time frame. But again, a heavy rejection on the bull market support band is never a good sign when it comes to overall market direction. We can see on the 3 day, we are still heavily trading underneath the bull market support band, and on the 7 day, very similar things. Moving on, we have our Ichimoku cloud. We're going to start on the 7 day. We have officially confirmed what I was warning about a few videos ago. We have officially confirmed a downtrend on the 7 day according to the Ichimoku cloud. How do we confirm a downtrend? We need 3 things. We need the price to be underneath the conversion line, the baseline, as well as the clouds. We have all those. Plus, we need the lagging span to be underneath the clouds. This confirms a macro downtrend. It's not suggesting a macro downtrend. It confirms a macro downtrend, guys. We are in fact in a macro downtrend. The last time this occurred, over here, 27 periods ahead, was over here, confirming a macro downtrend. We were bearish. according to this technical indicator, we are on the brink of a very significant drop. And like I said, if we head back to the Bitcoin chart, if we lose this level here, we will see a significant drop down to 30,000. Maybe it won't happen in a day. I don't think it will happen in a day. I don't think it could happen in a week, but I think over a couple of weeks, we will see it bleed down to 30,000 if we lose this level here. But like I said, there's still a chance we find a little bit of support and push upwards, only to get rejected from those levels again. All right, let's go ahead and bring up the RSI, and we'll also bring up the MACD in a second. So the RSI, again, isn't suggesting anything too fancy, isn't suggesting anything too great for us. We do have this downward trending resistance. We didn't even come up and retest this resistance yet, indicating, you know, obviously the price is going to continue downwards. If we go ahead and go to our 3-day chart now, let's go ahead and put on our 3-day chart and take a look where that 34.34 level is on the RSI. We might be able to see how close we are to that level, and should we be too worried. So the 34.34 on RSI is a level on the RSI chart that kind of indicates where we're going to see significant price drops. Every time we drop below the 34.34, we see very, very significant price drops and very rapid declines in price. It looks like the RSI is traveling towards the 34.34. We can expect the price, or should I say the RSI on the 3-day, to come down and retouch it. If, however, we lose that 34.34, that is just another bit of evidence suggesting a drop down to 30,000. We do need to defend that level if the bulls want any chance of getting some kind of relief bounce and potentially a push upwards to flip the trend. And finally, we're going to go through my favorite indicator, the Gaussian channel. Again, guys, we rejected heavily from the Gaussian channel here, not indicating anything good. And a lot of people are saying, oh, MegaWhale, we're below the Gaussian channel. Isn't this the Goldilocks zone to buy? Isn't this the great zone to buy? I want you to quickly keep in mind this. Take a look at this level here. Remember what happened here. And now what we're going to do is we're going to invert the chart. How is that bit any different than this bit here? It isn't. Technical indicators are invertible. Just as market patterns are invertible, technical indicators are invertible. Just because you are below over here, it doesn't mean you can't go lower. Just because you're above, it doesn't mean you can't trend higher. So we can definitely trend downwards from here while remaining below the Gaussian channel for quite some time. It is definitely a possibility. Just because we are below it, it doesn't mean we have to push back into it immediately. It can take an extended period of time. Just as when we're above it, we don't have to push back below it immediately. It can take an extended period of time before we break back below it and confirming the drop down. So on the Gaussian channel on the 3-day, what I would be looking out for is that price to re-enter the Gaussian channel, and I want confirmation of a break of this midline before I get any confirmation or any confidence in a move higher. That would coincidentally occur when the daily 200-day moving average breaks on the Bitcoin chart. So I'm going to go ahead and bring up the daily 200-day moving average on the Bitcoin chart now, so you're going to see where that level is. I think it's sitting around 47,000-ish. Here it is, 46,640, and that would line up with this level around 46,640. All right, a little bit shy. Okay, guys, so that's our technical analysis done. A lot of compelling stuff in there to suggest that we can potentially drop down to $30,000, and it will happen quite rapidly. So just to summarize, RSI 34.34, we're coming up on a retest there. If we lose that level, we crash pretty heavily. Ichimoku cloud, we've had that lagging span break through the clouds to the downside. The last time we did that, we saw a very significant drop and an extended downtrend. And I haven't even talked about the global economic environment in this video. I've talked enough about that. We're going to give that a little bit of a rest. But if you want to find out more about that, go check out our previous video. But we're going to talk a little bit more about interest rates in the community question. So let's dive right into the community questions. All right, let's get into some community questions. So the first question is, I would ask you from Mario. He wants to know, when we reach the bottom, should we be buying only Bitcoin, or is it smart to buy altcoins as well? Or should we wait for some bullish movement before we buy altcoins? Let's go ahead and look at the chart. We're going to answer this right nice and quickly. We have our Brave New Coin Liquid Index for Bitcoin, and we have our altcoin index over here. We can see from the green lines, which indicate the bottom for both cycles, or the bottom for Bitcoin and altcoins. From that bottom point to the first initial high on Bitcoin on the 9th of January, Bitcoin did 850%. Altcoins, however, in the same time period, did 544%. So in that initial period from the bottom to that first Bitcoin drop, Bitcoin outperforms altcoins. So therefore, in that first phase of the bull run, your focus should be on holding Bitcoin. Only after that initial first drop here, which was in our, looking back in 2021, which was from January to the end of January, so the start of February, that is when altcoins started to rally. So we take a look at altcoins now from that Bitcoin drop. Bitcoin ran from that bottom period over here. From the bottom, it ran up 124%. Altcoins from that same bottom period, which was over here, altcoins on average ran upwards. Let's take a look. Close to 400%. So on that last or that second phase of the bull run, altcoins massively outperformed Bitcoin. Now, obviously the drop on altcoins was significantly larger than the drop on Bitcoin, but even after that initial huge drop over here in May, that second pump up from the bottom to the all-time high, Bitcoin ran 131%, while altcoins once again outperformed Bitcoin at 166. So to answer your question, when the bottom comes in, or when the bottom is in, your focus should be to buy Bitcoin, accumulate Bitcoin, and then transition your Bitcoin profits and transition your Bitcoin into altcoins when altcoins start to rally after Bitcoin's first initial drop. Okay, so I think he asked two questions, so we're gonna go ahead and answer them together at the end. So we'll move on to the next one. Rippy Dippy, thanks for submitting your question. You asked, do you think VRA will make it to a new all-time high again after the market bottoms in the next 12 months? In other words, do you see it as an altcoin that will survive? So this is a bit of a fundamental question. We're going to go ahead and bring up the VRA chart. This is kind of asking a few things. This kind of asks, technically, where will the price go on the longer time frame? And then, do we think the price will kind of survive if we go into a full-blown bear market? So on the longer time frame, I do think VRA will drop, of course, with Bitcoin. We did post this chart over here, and we've said that we can expect to drop down to around 0.007. I do think that is very probable. Now, look, VRA is one of those coins that had an explosive move upwards in 2021. There was no doubt about it. It went absolutely parabolic, and for a good reason it went parabolic. It's a great coin. It's got some good fundamentals. It's got an NFT thing coming out soon. It's got some good partnerships with esports. It's definitely got the potential to survive. I haven't done a deep enough dive into the team, but I do want to say this. Altcoins don't necessarily just die off unless they're scam coins, and VRA has proven not to be a scam coin. The team has proven to be a viable and dependable, I would say, team in the cryptocurrency space, and therefore I have no reason, or I can't give you any reasonable doubt to why I think the coin would just die and not kind of return back in the bull run next time. I think it definitely has potential. It's hard to say. We have seen many coins in 2018 that kind of went absolutely to zero, and they went to zero and held at zero for a very long time, and all of a sudden they exploded well beyond their 2017 highs. We take a look at something like Dent. Remember Dent in 2018 went up a bit. It went crashing down, like it went 98% down, held down that level, and then all of a sudden it went up 50-60% in 2021. So VRA definitely has potential, but I don't think you should be looking at that much of a long-term right now. Trying to predict long-term potential when we're in a global economic downtrend is not a viable means for profit, or it's just not how you should be thinking. You shouldn't really care too much about that longer term time frame right now, but so longer term time frame is quite bearish, quite negative. Focus on the immediate price action, and you should be determining or think about what actions should you put in place right now to benefit from the current state of the market, or position yourself to benefit from the market when the market turns around. And right now, all we can do is look at the chart and say, well, it looks like VRA is going to continue downwards. If we do break this gray box zone, we can expect a pushback to all-time highs. Those are the only two objective facts we have on the chart right now. Nothing else here we can say with any other conviction. All right, next question. What is the probability, and do you think that in the future boom, Ethereum will increase and exceed Bitcoin in percentage terms? So I assume you're talking percentage terms in price. Will Ethereum jump the Bitcoin market cap? Yet, in the future. Boom. Thank you for everything you do. All right, awesome. Thanks for a nice comment, mate. I appreciate it. Now let's go ahead and take a look at the coin market cap for both of these coins. So Bitcoin, and we're going to take a look at in terms of all-time highs. So market capitalization, and we'll go year to date. We had an all-time high for Bitcoin at around 900 something billion, so close to $1 trillion. And for Ethereum, we had, let's take a look, year to date market cap, we had around 450 billion. So Ethereum was about 50%. So Ethereum was 50% behind Bitcoin in terms of total market capitalization at their all-time highs. To answer your question quickly, I don't think Ethereum will ever flip Bitcoin. I think a lot of people like to run that narrative as is a different narrative, a popular narrative, but in reality, a $450 billion gap is way too large to be closed over one bull run, and is way too significant to, in my opinion, be closed unless Ethereum comes out with something absolutely revolutionary that would change the crypto space permanently and completely wipe out Bitcoin. In that sense, I still think Bitcoin is king. Bitcoin will run the market. Bitcoin will always be the #1 market cap coin. I don't see that changing. I just don't see that changing. I don't see a reality where that actually changes. So let's go ahead and move on to the next question. Will a decrease in inflation percentage, as I just assume you say it mean inflation, stop the markets and Bitcoin dropping in prices? Great question. Let's go ahead. DXY. So your question is, do you think if inflation drops, the asset prices or risk asset prices, including Bitcoin, will start to rise again? So there is two ways to account for this. We talked about this previously. We have inflation, which has been increased. So we've had a rising inflation, which has resulted in interest rates rising to counteract that inflation, which has resulted in, obviously, we're going to skip all the information through here, but rising interest rates result in asset prices to decrease, essentially, because you have retail investors who now have higher cost of goods. Household income starts to decrease, their available cash flow starts to decrease, and their debt obligations increase based on their loan obligations as interest rates rise. Therefore, they start selling off their assets to increase cash flow to pay off their debt. Companies' debt to service ratios start decreasing as their interest demands or their interest requirements on their debt start to increase as interest rates rise, and therefore they have to sell off their risk assets or liquidate any liquid assets to pay off that debt, enable or to be sure to keep their cash flows and their balance sheet looking healthy. So your question is if inflation decreases, will this process reverse? Theoretically, yes. If inflation decreases, this process will reverse, but we have to think about what causes inflation to be high in the first place. So if interest rates decrease, yes, we will have a reverse effect. The money will flow out from the US or the US dollar and move into these risk assets and other assets, therefore increasing prices. But if money printing remains at the same level and the supply shock or the increase in supply continues, then inflation will continue. So we need the supply of money to decrease. Therefore, we need interest rates to rise for a period of time to get that supply down to decrease inflation. So right now, the only way inflation can go away is if we go through a period of time, I don't know how long it's going to be, maybe a year, maybe 2 years, maybe 5 years, of where interest rates rise for long enough to counteract or reduce inflation and reset the global economy. We are too far gone right now to just turn a switch on and flip it. We have to go through this period of downturn to reset the economy and bring inflation down. And the only way we can do that is through rising interest rates. And unfortunately, the side effect of that is that asset prices fall. So I hope that answers your question. The next one will be from Jiggerman. Thanks, man. Thanks for submitting a question. He assumes, let's assume Bitcoin retraces to 24K-ish. Cool. How can we know if Bitcoin has bottomed if interest rates continue to rise even after we hit 24K? Do you think we will just move sideways for longer? Okay, that is an awesome question. So let's go back to the Brave New Coin Liquid Index. And his question is, if we reach that $24,000 target of the 200 moving average on the weekly chart, and the current global economic environment is still looking pretty trash and interest rates rise, do we think we can go lower? And if we just quickly reference back to this chart here, remember our green line down here at 12,161? That is our absolute worst case scenario target. So that is always a possibility. We can definitely come down to a level when we do a measured move from this level here, and that is our 12,161 target. So yes, we can definitely go lower. The issue with that statement, or the issue with this whole thing of us even coming lower, is that Bitcoin has never really held any price points or gone into a downtrend in the history of Bitcoin below the 200-day moving average. So if we lose this 200-day moving average and we start heading down, we're technically in new territory. We're now in a macro, we're talking macro, large, yearly downtrend for Bitcoin, and who knows really what that can do. It's way too hard to tell you right now in so far advance where the price can go from there. I think we could see 12,100, but you're right, if interest rates continue to rise, even if we hit that 24k target, we can continue downwards. Remember, we assume that all we're doing right now is we're not saying the 24k target is 100% going to be the bottom. We are saying, as per historical data, the 24k target seems like a viable bottom. All right, it doesn't mean it's 100% going to be the bottom. We have to reassess what is happening when we reach this level. Remember, we called for the top. We said 35k. We went to 35k. We didn't say 35k was going to be the bottom. We just said that was our first target. At that point, we say our next target is 24k. Who knows? This may not be the bottom. We may continue lower, but like I said, we need to assess it as it comes. But yes, as you just mentioned, if interest rates continue to rise, risk assets will continue to fall, and thus we can expect Bitcoin to continue to fall. Okay, so the next question is, I have ALU and PYR altcoins, and they're 1/3 of the value that I paid for them. Do I hold or sell? All right, so Dave, this is not something I can just jump on a chart and tell you. I don't know your current personal financial situation. I don't know your savings. I don't know your portfolio size. There's a lot of information I need here to be able to give you some advice into regards to what exactly you should be doing in regards to this position. What I can say though is you should never allow yourself to lose 33% of the value of a singular coin that you paid for. You clearly need to assess your risk management strategies or put in place a set of mechanical rules that will prevent you from going this deep or this deep into a loss on a particular coin. So I can't really answer that any further for you there, Dave, but I would definitely suggest watching our video on risk management. I talked a lot about risk management. I'm going to quickly jump up and show you where this video is. If you go to our channel and click risk management, learn to trade, I highly recommend you watching that video. That can definitely assist you with your future positions. All right, we have the double question. So the double question was the death cross on the 3-day chart of Bitcoin coming up in 2 weeks, or give or take. Yep. How relevant is this? Last time it happens, we had a significant drop. We're going to answer this one first and then head back to your second question. So 3-day chart, 200-day moving average, and 50 moving average will be our death cross moving averages. So we're going to bring those two up here. And we can see, yep, we do have a death cross coming up in a couple of days. And just to note, guys, we got rejected from the 300-day moving average and found resistance here. Now, a moving average is basically the average price over a certain period of time. So 200 is the average price over 200 days. The 50 is the average price over 50 days. So generally, it isn't the result of these moving averages that crossing that results in a crash. It is the crash or the down price or the downturn in price over a period of time that results in the moving average moving averages crossing. So I butchered that, so I'm going to say it again. It isn't the result of the moving averages crossing that equals a Bitcoin drop in price. It's the fact that the prices have been dropping that results in the death cross occurring, or the moving averages across. So all it is saying is it's saying that over this last period, we've had a significant decrease in price, more so that the average 50-day price is now lower than the average 200-day moving average price, indicating we have potential further correction to go. Now, it is just a coincidence that the last time this happened at the dead cross, we crashed down majorly. We had a massive symmetrical triangle or ascending triangle formation over here that we broke down of at the same time. If we look at previous instances, the crash hasn't been on the day, it's been slightly delayed. So the 2018 situation was just a huge coincidence. What it can tell us though, it can tell us that the price is still very much going to continue in a downtrend for quite some time. And your second question was, if you're a part-time trader, what is the best strategy then playing macro trends? All right, so like I said, it doesn't matter if you have an hour a day, 12-hour days, or whatever. Your strategy should be exactly the same. You should be trading based off very, very tight risk management. You should be using a certain mechanical trading rules such as the 10% or the 1% rule when deciding allocation of funds into trades. And you should always keep in mind the macro situation. You should be trading the trend and not going against it. So it's a very broad question, and there's obviously a lot of ways I can answer that. I think a question like that kind of requires a whole entire separate video. So we're going to leave it at there, guys. If you have any questions or you want your question submitted in the next video, go ahead and leave a comment down below and we can always answer your question then. Until then, guys, I'll catch you in the next one and I hope you enjoyed.